In this video, I'm going to show you how you can start trading Forex with only $10 account. How can you trade Forex with only a $10 account is what I'm going to be actually showing you in this very video. So if you are watching this video, I want to ask you a question. Why do you want to trade with a $10 account? Why do you want to trade with a $10 account? That is the first reason that you should actually know. Why are you going to trade with a $10 account? Now, these are the reasons. One, when you don't have money, first of all, if you are lacking money, you are lacking capital, big capital, but you really have the anxiety of starting to trade Forex. You want to engage in this financial market, but you don't have any single capital. Now, the lack of capital is not an excuse for you not starting. If you really have $10 account, in this video, I'm going to show you how you can actually use that $10 account to engage yourself in this market. Now, the second thing that you might want to actually use $10 account is because you don't know anything about this market. You just want to try how do people make money and how do people lose money in this very market. So you just want to try so the $10 account can actually work for you. And the third thing also, just not even professionals use the $10 account. Not that the $10 account is used by only people who don't know how to trade the market. Very many professionals use $10 account, and in most cases, when flipping accounts and even in news events, when there is news events. Now, if you don't know about news events, the more you stay in the Forex market, you'll know about news events and you'll understand how a news event is used in order to actually flip accounts or make more money in this Forex market. So what are we going to do in this very video? In this very video, we are going to discuss three steps that you are going to be taking in order to trade your $10 account. And remember, at the end of the video, I'm also going to show you a trade that I have personally taken, and a strategy that you can use to trade your $10 account. So without wasting your time, let's begin straight away with the video. Now, the first step that you really need to trade your $10 account is actually this. You need leverage. So this is the first thing that you really need to trade your $10 account. And if you need leverage, what does leverage mean? Leverage simply means the amount of money that a broker gives you. What is leverage? Leverage is the amount of money your broker gives you to trade for you. Now, if you have some money on your account and you get a brokerage and the broker is giving you 1 to 1,000, this is the leverage that we are going to use on our $10 account. So if we have a leverage of 1 to 1,000, it means at the back end if we can get a broker that can give us this leverage. So it means not all brokers are going to be able to allow us trade our $10 account. We only need a broker that is going to actually give us a leverage of 1 to 1,000. So if we have $10 account and we get a leverage of 1 to 1,000 or more, so you're going to check the link in the description. I'm going to put a broker that can give you this leverage. Not all brokers are going to be able to give you this leverage. So if we have 1 to 1,000 leverage, or we can even put 1 to 2,000, there are some brokers that can give us up to 1 to 2,000. But for the sake of this video, and of course, it is also advisable if you're using a $10 account, maybe I'll advise you to use 1 to 1,000. You can actually get more with the brokers that can give you more, but there are a few brokers that are going to give you more than this. So 1 to 1,000, that will simply mean that in the back end we have a trading power of actually 10,000. We have trading power of 10,000 by only using 1 to 1,000. So that is the leverage that we need to use. So this is a small account, therefore we need a big trading capital for us to trade, a big leverage. So 1 to 1,000 is going to work for us. And we are going to see how is 1 to 1,000 really going to work for us. So that's the leverage that we are going to use. That's 1 to 1,000. And the brokers that we are going to use for this particular leverage that they are going to give you more than this. I'll talk about how you can increase your leverage or how you can add more leverage in which cases. But this is the leverage we are going to use 1 to 1,000 so that we can trade our $10 account. Now, the second thing that we really need to trade our $10 account is actually risk management. Now, some people will tell you with risk management, the $10 account, you cannot manage your risk very well. Now, risk management means actually knowing how much you are willing to lose into the given trade. How many trades are you going to take so that you can blow your account? You should actually know how many trades do you feel are you supposed to lose so that you can blow your account. In every trade, how much are you going to risk? Now, for our $10 account, remember this is our small money. For $10 account, we are going to risk. What is our risk management going to be? We are going to risk actually 10% of our account. We are going to be risking 10% of our account. Now, if you are risking 10% of our account, that simply means that we only need 10 trades. If we lose 10 trades, that's how we are going to blow our account. If we lose 10 trades, of course, if we follow a strategy, a simple strategy that is going to give us actually an upper hand of being correct than wrong, it's not going to take us 10 trades before we also win a trade. So we are also going to be winning trades. Therefore, it means if we have a good risk management, we cannot have a very good risk management because we are risking 10%. But of course, there is nothing we can do because we only have $10. We are trying to actually make ends meet. So this is $10. We have our $10 here. So we need 10 trades so that we can blow our account. We know very well. And how are we going to, which lot size are we going to use? So what you are going to do, I'm going to put the link of a position size calculator. So I'm going to come to to Google and type position size calculator. I'm going to pick the baby pips position size calculator. It is easier for me. So this is what we are going to be putting in here. They're asking us to put account balance. How much are we having in our account? So for us, we're having $10 in our account. What risk are we going to use? We are going to risk 10% of our account on every single trade. And which stop loss are we going to use? Now, we are going to be using tight stop losses. We are going to really use tight stop losses. So we are going to use only 10 pips stop loss. Is it possible? I'm going to show you a trade that I've taken, and I'm going to show you everything that you really need to know so that you can trade like this one. Now, you can see that our 10%, so you calculate what loss size are we going to use. So we are going to be actually, position size unit is 1,000. Remember, we have a purchasing power of 10,000. So our position size unit they are asking for us is 1,000. Now, which standard lot are you going to use? We are going to use a standard lot of 0.01. So these are not so important. These down ones are so important. Even this one is not so important. But the most important thing why we came to position size calculator is to get the standard lot size that you are going to use. So we are going to use a standard lot size of 0.01, meaning that we are going to be risking a stop loss, and our stop loss is going to be in 10 pips. 10 pips. It means for every 10 pips, how much are we risking? How much are we risking? How much are we risking? We are risking $1. It means if a trade takes our stop loss, we are losing $1. So it means for 10 pips, we are losing $1, and also for 10 pips, we are gaining $1. It means if we get a 1 to 2 trade, it means we are targeting 20 pips profit, and for 20 pips profit, we should be getting $2. So if it means if we win a trade, we are getting $2, and if we are losing a trade, we are losing $1. That is in case we are using 1 to 2. But I advise you that you should use more than 1 to 2 if the position size, or if a trade can allow you to target a profit of more than 1 to 2 so that you can maximize your profits. Now, let's come back to which strategy are you going to use. The third thing, you need a strategy. So these are the three things that you are going to need to trade your $10 account. The first, you need leverage. The second, you need risk management. Leverage, we have said 1 to 1,000. Risk management, we have said you are going to use a lot size of 0.01, and also you are going to be putting your stop loss in 10 pips. Now, which strategy are you really going to use? Now, let's get out a strategy. So I'm opening my chart right now. This is the trade that I'm in right now, but I'm going to tell you how I spotted this very trade. Now, let's first talk about this trade before we go so much, if it is respecting our risk management plan. Yeah, this trade, I took it with a lot size of 0.01, and you can see that our stop loss is actually in only 9 pips. When I pull out the calculator and try to calculate the hours from the entry to the stop loss, it's actually 9.1 pip, 9.9. It's the actual pip is 9.5 pip, meaning I'm putting my stop loss in 10 pips below. So that simply means that if I'm to lose this trade, I'm only losing $1. And actually, with the trade management, once we are losing this trade management, I'm just waiting for it. If it can break through and close above this line, I'm going to adjust my stop loss so that to up to around here, so that I can have a risk-free trade. But I need to first wait for it to break through this line. Now, how much will if this trade takes my profit or beats my profit? You can see it is a 1 to 4. I'm risking $1 to get $4. That is, if it takes my take profit, that means that in this very trade I would have taken forward. I would have won $4 profit. So let's now talk about how we plotted this trade. Now, it is very simple. This strategy is straightforward. As I told you, this strategy, when I come here and I pull out this strategy over here, when I'm to pull out what this strategy is, you're going to find that this strategy is one of the simplest strategies out there. So what is the strategy? This is the strategy that we are going to be using. It is a trend line and support and resistance. These are the two things that we are going to be following. So let's try to see them, how I plotted this trade. Now, when we come to a 1 hour time frame, you are going to see that this trade, it banged. These were my strong supports. So it banged my support and it broke through this place. It broke through, this was a resistance. So it broke through a resistance and continued. So this was my trend line. I plotted my trend line on 1 hour time frame. I spotted my supports and I saw that my support was already bounced. So I plotted my trend line. I plotted my trend line over here on a 1 hour time frame. Of course, when you plot your trend line, this is where you come to 15 minutes time frame. After plotting on 1 hour, I come to 15 minutes time frame to look at the trends. Now, when we are following a trend on a 15 minutes time frame, we know that 1 hour is showing us bullish. It has already broken through this resistance also. So what we do is break and retest of supports and resistance. So this was a resistance before. So when it was broken like this, we waited for a retest. It was broken, we waited for a retest. I took a trade yesterday over here, but for this particular trade, we were waiting. This was now this became, once it rejected, this now becomes this top, this last high, the previous high. Let me use the previous high before we had come over here. We were around this place. So this was our previous high and this was the low. So when price came and broke this area, this is the line that you are seeing here. This one was acting as a resistance now for the price, because when price reached here, it rejected and came down. Now it means what was our resistance becomes now what was our resistance. When price is coming to it, we expect it to be a resistance. But in case when price breaks through it, and it means that it becomes now a support. So when price comes back to retest what it has broken, that's how we enter this trade. Already we know that the trend is an upward trend. That's how we enter this trade with our minimum stop loss, not fearing anything, because once it bangs our stop loss, we are losing $1. Once it goes and hits our take profit, we are gaining $4. And once it breaks through this resistance line, once it breaks through this resistance line, we adjust our stop loss to around this area so that we can have a risk-free trade, or we can break even. That's how you can manage your trade. That's how you can trade a $10 account. Now, if you really want to start trading Forex, the broker that you can use to give you this leverage is already the first link in the description below is to a broker. You can get to that broker and fund your account and make sure you trade using at least a strategy that is going to allow you get more wins than losses. But remember that there is nothing that there is no way that you are going to run trades without any loss. You should know how much you are losing and how much you are gaining, but the game is to gain more than what you are losing.